Hey there, friend. I'm thrilled that you've decided to join me each week here on the podcast as I read through the Inventory Genius book. Now, if you're anything like me, you're going to put these principles into practice so much more quickly if you highlight, underline, and put dates beside each actionable step. So if you haven't grabbed your paper copy of the Inventory Genius book yet, I want to encourage you to head on over to ciarastockeland.com and grab your copy. I'm so excited to sign it and drop it in the mail for you. I want you to have that paper copy in front of you as you listen each week to each chapter I read. This way, as things stand out to you, as you have questions, as you have thoughts, and as you decide to take action, you can highlight, underline, and follow along in the paper copy as you listen to me read each chapter. So head on over to ciarastockeland.com, grab your copy, I'll sign it, and I'll drop it in the mail. Now back to the podcast. Hey friend, welcome to the Inventory Genius podcast, where we work together here to make you an inventory genius. We talk about profit, we talk about cash flow, and we definitely talk about your paycheck. Because at the end of the day, it's all related to your inventory. Let's go.
Anne was knocking it out of the park. We had been working together for several years, and I asked her what the biggest change was since we had our first call several years prior. Before I started working with you, I was running about a 45% margin. Since we started working together, my margin is up to 60 to 65%. A jump of 15% or more in margin sounds good, but what does that actually mean for your business? Let's look at what an increase in margin can do over time. Let's say Anne grossed $500,000 in top-line revenue last year. Running at a 45% margin, her cost of goods sold on those sales would have been around $275,000. This would have left her with a gross margin of $225,000, meaning in order to profit at all, she would have needed to keep her overall expenses for the entire year at $225,000 or less. This year, Anne increased her margin to 65%. Even though she brought in the exact same $500,000 in revenue, those sales only cost her $175,000, yielding a gross margin of $325,000. If the cost of running her business ends up being $225,000 again this year, she will now show a $100,000 profit on those exact same sales. That is why increasing your margin matters, and increasing your sales while increasing your margin can matter even more. So how do you do it? Is it all about buying smart and buying right? It is. Take the emotion out of your inventory purchasing and focus on the right customer at the right time for the right price. A lot of rights, I know, but this can be done in part by using a tool called an open to buy. An open to buy, or OTB, is essentially a buying budget. It is a way to eliminate emotion and focus on the right things when it comes to making a purchase. You want to be an inventory genius? Become best friends with your open to buy. The simple formula for open to buy is your planned sales plus your planned ending inventory minus your beginning inventory, and this equals your open to buy. In everyday language, it's your sales goal plus how much inventory you want on hand at any given time minus the inventory you're starting with today. This equals your open to buy. Even simpler, your goal plus what you need minus what you have equals what you can buy. What's your sales goal? Add that to what you want to keep in stock, then subtract what you already own, and the difference is your budget for more. If you Google open to buy, you will find other metrics like markdowns that you can add to the formula. Now, that's fine and dandy and definitely something to think about down the road, but if you're currently purchasing only what you like and what everyone is telling you they will absolutely buy if you stock it, then stop the madness and go with a simple open to buy. Start small, be consistent, and focus on margin from there. So how can an open to buy help increase your margin? You won't simply be guessing, buying, guessing wrong, marking down, and repeating this ugly and unproductive cycle. You will be buying smarter, and buying smarter means more margin. When you begin to use an open to buy, you will start to see that what you buy directly affects what you make. You start to focus on the right things, replacing what's sold, not buying just because. Once you start to really use your open to buy, buying will become a game of strategy and you will be the game master. Should I buy more shirts? I don't know. Do I need more shirts? If I do, why did the last one sell so fast? And what else can I use my buying dollars for? Instead of buying for the sake of it and having too much, leading to the need to mark it all down, thus decreasing your margin, you will become more strategic with your decisions and will focus on the right things. As my good friend Susan Bradley, founder of the Social Sales Girl, says, where your focus goes, your results follow. Once you master the art of the general open to buy, you can dial in and create an open to buy for any and every category of your business. Suddenly, that overall budget you will have will be divided based on every category, and the inventory that sells best will get replaced first. You won't simply be guessing, buying, guessing wrong, marking down, and repeating this ugly and unproductive cycle. You will be buying smarter, and buying smarter means more margin. Another way to increase margin is to focus on pricing. Remember the client who I asked to mark up everything in her store by an additional dollar? That activity produced margin. Let's take a look. If she had 1,000 items in her store that were $1 each, she could sell them all and make $1,000 in sales. If each item cost her 50 cents, the cost of those sales would be $500. This would give her a margin of $500. Let's say she listened to my advice and marked everything up by $1, though the product still costs the same to purchase. She now sells everything and would make $2,000. Now she has a margin of $1,500. That means an extra $1,000 for her simply from increasing her prices by $1. Properly pricing your product matters. But I'll lose my customers. No one will pay more. It won't work. Let me be sarcastic and ask you this. How is it working for you so far? Stay out of your customer's wallet. Stop looking at what every other business on your block is doing and how they are pricing. Focus instead on buying smart, understanding who your customer really is, and pricing your product to make a profit. If the idea of marking up your product scares you, start small. Start by marking up your best sellers by $1. Choose products you know everyone will want and need regardless of what you price them at. There's yet another way to increase margin, and that's adjusting what you pay for your products in the first place. Finding the right products, negotiating the lowest cost to yourself, and pricing them for a profit is the trifecta of margin growth. Off-price, overstock, liquidations, closeouts, buying in bulk, asking for discounts. These are all ways to make your buying dollars go farther. I recently worked with a client who had found herself in some serious debt. Interestingly, she was still grossing around the same in monthly revenue. Some months were even higher. Sales weren't declining, but she was finding herself constantly without cash. And where does that usually lead? It leads to debt. Here's how this might look in your business. You're out of breath. You feel the anxious pinch. Then you get that feeling of instant relief when that capital loan company tells you they can lend you money with no credit check, up to a certain amount. Best of all, they promise it will deposit straight into your bank account that same day. You finally feel as though you can breathe. This month, the bills will get paid. This time, it will be different. You'll buy some new inventory, you'll pay for marketing to drive traffic, and you'll never borrow again. So, you click on that little button, enter some quick information, and agree to a nice capital loan. The cash is deposited, and you can finally stop holding your breath. That is until the next month rolls around and you're in the same bind. The cycle continues and the hole gets deeper. This is what happened in my client's business. Having never looked at the root of what was causing the cash crunch in the first place, she continued to make the same mistakes. Even more debtors were pulling money directly from her checking account every single month. She even had less control over her cash and felt even more despair. We started looking at her margin, which was too low. We took a look at her expenses, which were too high. Our eyes dropped to the bottom of the profit and loss statement, and we saw the reason for her debt. At the end of the day, her sales, less her cost of goods sold, didn't yield enough to even cover her monthly costs, let alone the debt she had already accrued. So while the loans offered temporary relief, she would continue to be in the same boat, only with more holes, without fixing her margin. What was her plan of action? Focus on the right things first. Focus on margin. We started by looking at her current vendors and suppliers, which vendor produced the best margin and the quickest sales. Once we identified the vendor, we created an open to buy for only that vendor's products, essentially making this vendor its own category. Then we began to formulate a plan to buy into that extremely high margin product every single week. This meant that each week we would only need a little bit of seed money to plant a margin producing tree, if you will. It looked similar to this. Buy for $150, sell for $450. Take half of that, which is $225, and sell that for $675. Take half of that, which is $337.50, and sell that for $1,1200.50. As you can see from the graph listed above, spending $150 creates $450. Then taking half of that, $225, creates $675, and so on. You can do this with a current vendor or off-price, closeout, or liquidation products. Buy low, sell high. Do this over and over and over, and do this often. Track the money spent and the money made. Reinvest a small amount each week to put profit back into your business. It is not a quick fix, and it requires you to remain intentional with every dollar spent on inventory. But focusing on your margin is focusing on the right thing. You are on your way to becoming an inventory genius.
Hey friend, thank you so much for tuning in today to the Inventory Genius podcast. If there's something that you heard today on the podcast episode and you want to dig deeper into becoming an inventory genius yourself, I want to invite you to head on over to my website, ciarastockeland.com, where I have multiple ways that you and I can work together on your inventory. I want to help you with your profit, your cash flow, and your paycheck, because at the end of the day, it's all related to your inventory. So head on over to the website, connect with me. I'll work with you soon. See you then. Hey there, friend. So I've already invited you to grab your copy of the Inventory Genius book. But if you're ready to go a step further and dive in, if you want a quick start to becoming an inventory genius, then I want to also invite you to grab your seat and the Quick Start to Inventory Genius course. This really easy to digest course is going to include all the tools, spreadsheets, and systems you need to implement the Inventory Genius method immediately in your business. We'll talk about creating an open to buy plan. We'll talk about creating a profit plan. We'll talk about creating a business budget. And then we cap it all off with a private one-on-one call, you and me. Yep, that's right. The Quick Start to Inventory Genius course includes a one-on-one coaching call with me. So you can go through the book, you can go through the Quick Start to Inventory Genius course, you can write down your questions, and then you and I can get on the phone and problem solve together. Head on over to ciarastockeland.com, grab your seat at the Quick Start to Inventory Genius course. See you there.